Hi guys, in this video let me show you guys how to spot arbitrage to make at least 2% of your money every single time you trade this thing on the cryptocurrency market, right? It's going to be a very interesting video and I'll walk you guys through on how this is going to be done. So all you have to do is to watch to the very end, right, and see me show you guys how this is going to help you to make money yourself. Now I'm currently on the coin market cap, as you can see, and these are the current price of different crypto around the world. You can see BTC, ETH, and the rest of them, right? So we'll be using one of them to make this illustration, or even just for us to understand this. Then thereafter you can go ahead and execute. It is very much simple to understand, right? Now what I have to do here is very simple. I just have to scroll through now and look at different coins and their prices, and now use them to do this illustration. Now let's first of all use a repo, for example, right? If I click on this XRP, bring me over to this place. So currently the price of XRP is at $3.13. Okay, now what is next for this is that once you are here, you are heading straight to the market section. All right, so allow it to load, give it some time. Now we go into the market section. Okay, so basically what I want to show you guys there is something that's going to help you. We call it the plus 2% and the minus 2% depth. This alone is going to help you to know when to buy a particular coin, and if it is that liquidated. What I mean is that if there is a liquidity in that particular coin at the moment, and who is obviously controlling the market at the moment. Now once you are here, guys, you can see we have different exchanges here where this coin is being traded, like on Binance, bybit, orbit, OKS, bjet, and the rest of them. Now if you scroll by your right, this is where that is very much important. Okay, now let me show you guys what I mean here. Right now, once you are here, you can see we have this space here, the right, the plus 2% depth and minus 2% depth. Now this shows different order books. Now when I say order books, I'll go to my bybit app to show you guys what order book mean. Now when you see the plus 2% depth, it simply means the amount of money, right, that the sellers are putting into the market. That is the buy limit orders, right? So, and also if you only see the minus 2% depth, is the amount of money that the buyers are putting. So what it simply means that if the plus 2% is basically bigger than the minus 2%, it simply signifies that that coin is likely going to drop in price to grab those liquidities before moving up. Now if the minus 2% depth is more, it simply means that that particular coin is likely going to increase, in price to grab the liquidity, probably drop down. So liquidity is what controls the market, which most of us is aware of that. All right, now one of the things that made this one to be very much good is that it will tell you different liquidities or different money that is being placed in different exchanges. Now if you take a look at this one, now on the bybit we have about 9 million orders, right, on the plus 2 and 8 million. So on the Binance, it's likely going to drop in price to grab those because the buyers are more. Do you understand? So in this case, you are likely going to set your own buy limit order in plus 2%. I'll show you guys how to do the calculation, right? Now if it is on the Coinbase, now you can see that of Coinbase, that on the plus 2% we have 5 million orders resting, and on the minus 2 we have about $8 million order, right? So it simply means that on Coinbase it's likely going to first of all grab liquidity above, then drop. So you need to also buy now and target 2%. That makes sense. So you can see that different exchanges here have different liquidity, so there's no one that is like accurate to each other. So this tell you that different things are happening across, and this is where we make money based on these discrepancies, right? if you have bybit at this point, you are going to see that we have about $3,481,732 in the plus 2%, right? And you can see the minus 2% is a little bit lower, although they are still in the same range. Now, what does this tell you guys? Okay, it tells that these are the things that controls, these are liquidity, these are orders. Now let's go to the bybit, sorry. Look at what we call the order book here. The order book here is this, right? You can see the order book here now. This place you see price moving. This red side is the minus 2%, and this glitter is plus 2%. So the amount of orders placed down here, that's the amount you are seeing, that millions and millions you are seeing over there. So any order place, any buy limit order place is going to be here, and any sell limit order place is going to be here, right? So here is the sell side and here is the buy side. So if the money that I place on the sell side is higher than the one placed on the buy side, market is likely going to grab that liquidity. So let me show you guys what it means by liquidity grab or pushing up. Now, if you come to the chart here, that will make more sense. Now, you see this thing happening here. Let me show you what I mean. You see this thing happening right here at this peak here. This is what we call liquidity grab. All right, market first of all come and grab those liquidity, then drop. That makes sense. So it's obviously going to do this thing whenever there is a higher, amount of order. Markets move based on liquidity, based on stop losses and take profit, and those of them. You just know how this thing works. So what gives us the intel on what to do is what we see on the coin market cap. So now this is the WIF. So WIF now is a coin, right? So if the plus 2% of this WIF is lesser than that of the minus 2% debt, it simply means that it's going to first of all drop, grab those liquidity, then push up. But if the minus is greater, it's then going to drop as well. Now grab those one that is under and move. And the way you calculate this thing is very simple. So let's say we want to calculate what is the percentage you are going to be using for this. It is very much simple, all right, to calculate. You just have to times this by the 2% of it, then set your price there. All right, so for example, now if I want to calculate this thing now to see how much money you'll be investing in this, so you're gonna say like the 2% of, you times it by the current price of the coin. The coin of it is 0.980. 0.9880. So this is the price you'll be setting your take profit. So if I, after checking my coin market cap and I see that the price, all right, that the liquidity on the sell side is higher, fine, what I'm going to do is simple. I will set that, I'll use my limit order here to set my price. It's not going to be at this price again because I want to sell, for example. So my selling price will be this. That is 0.01976. all right, 0.1976. It's going to be my 0.1976. It's going to be my what, my selling price. Then if I have 100 WIF, I put it here. All right, so if I'm buying at the current price, okay, which is this, I'm telling at this current, and this is what I want to say, I'm having this confidence because I've checked already on my coin market cap, and I'm seeing that the liquidity that I have on the people's keep placing their sell limit order is higher. Like in this case of Coinbase, you can see that the minus 2% debt is obviously very high, which is 8 million against 5 million. So there is no way market will not run towards that particular direction. Remember, this is peculiar to each exchange. So over time, they may correspond, but these are the ways you make money, right? This happens so fast, so you not even notice it. But with this particular info you are seeing here, you can be able to replicate this thing and make at least 2% of any money you are making. So you guys might see how much is 2%, right? Now let me show you guys a magic. If you do 2% of 100, let's say 2% of let's do it 100,000, okay, for example. all right, it's 2,000 naira. It is money. So if people that are doing it with 2 million naira, and this 2% of 1 million naira, for example, all right, is about 20,000. A lot of people have more than this on their trading account. So if you can be able to replicate this thing and make within some minutes, I've made this 20k, it's worth it, right? And you move on to the another coin again and do the same thing. You are not doing this thing by giving anybody your money. You are only using the info you're getting already on the coin market cap to do this thing. I hope this kind of trading makes sense. You understand what I'm saying? If you don't get anything, drop a comment in the comment section. I'm going to answer you guys or make another video to explain more. But I hope this can help you understand what I'm saying. So if it is used to buy it more lower and sell high, fine. If it is used to buy at current price and sell higher, I prefer when the sell limit order is higher than the buy limit order. So I can buy at the current price, then sell using the 2% of it, which I know that the markets are going to gravitate towards that based on liquidity trading. I hope that makes sense, guys. So if you like this video, give me a like, share, subscribe. I'll see you guys in my next upload. Until next time, guys. Peace out.